Dr. Bonde and other distinguished panelists and delegates. I am Virupaksha, Deputy General Manager from Canara Bank. I am directly involved in the implementation of financial inclusion initiatives in the bank. So, for a change, I would like to show one short film for 5 minutes, which depicts the initiatives taken by Canara Bank in the implementation of financial inclusion.
तुमने भी तो प्रधानमंत्री जन धन योजना के तहत कैनरा बैंक में खाता खोला है ना? उसमें रुपया जमा क्यों नहीं करते? सुरक्षा के साथ जितने दिन रुपया रखते हो उतने दिन का ब्याज का फायदा भी मिलेगा।
अरे भैया, बैंक में रुपया जमा करना निकालना बड़ा ही मुश्किल काम है।
जब मैंने खाता खुलवाने के लिए कहा था तब तुमने यही कहा था। अब बताओ क्या परेशानी झेलनी पड़ी?
कुछ भी नहीं भैया, खाता खुलवाना तो बड़ा ही
एक
Canara Bank, together we...
That is financial inclusion. Actually, nowadays, everybody is talking about financial inclusion. Will you stop this one? Yeah, you stop. Yeah. As if financial inclusion is a new innovation. Friends, as you know, financial inclusion started in India with the nationalization of banks in 1969. As you know, soon after the nationalization of banks in 1969, government has come out with so many initiatives. Starting from SFDA till Pradhan Mantri Mudra Yojana, that is the latest edition, we have experimented so many methods, so many innovations, so many models for bringing about financial inclusion in the rural area. But even today, we are yet to find a perfect model which delivers the financial services to the downtrodden at affordable cost. The search is still on. Friends, as you know, soon after the nationalization, we mandated that target priority sector lending. Then we opened RRBs, regional rural banks. Then we initiated lead bank concept. Then so many schemes. Then IRDP came. Then local area banks, service area concept came. And in 2010, this financial inclusion first phase, or so-called Swabhiman, that first phase of financial inclusion was called Swabhiman, that Swabhiman came. Though during the first phase of financial inclusion, we opened about 18 crore accounts. Out of 18 crores accounts, 10 crores accounts were opened through branches, another 8 crores through business correspondent or bank mitras. But if you analyze those accounts, nearly 82% of the accounts were either inactive or dormant. Then government thought the concept of financial inclusion cannot be achieved just by opening the accounts. So all the services, financial services, they are to be, there may be by way of pension, or maybe by way of insurance, or by way of credit. So all these financial services, when they are provided to the last milestone, that is in the village level, then only the concept of financial inclusion can be achieved. That's why PMJDY, it took a new shape. Here in the PMJDY, it is not mere opening of accounts. It is the bundle of financial services that we are going to provide. You may be this one astonished to accept the PMJDY is a great success. In the sense, though there are some World Bank or they are critically criticizing some of the activities, within a span of 8 months, you see, we opened about 15.45 crore accounts. Even 5 or 10% them duplication may be there. Even then, it was a great success. Through these accounts, as a whole, we canvassed about 15,800 crores of deposits. You see the potential available in rural area. You take the example of latest insurance, that is Jivan Jyoti and Jivan Suraksha. within a span of 4 or 5 days, all banks put together, we canvassed about 5 crore of insurance. You see the potential. You see the potential, insurance potential. Worldwide, the penetration of insurance is about, on an average, it is about 10%. But in India, it is less than 4%. But you see within 1 week, the achievements, how much success we gained. So, this is financial inclusion is not mere opening of accounts. It is the process of extending all the financial services to the society at affordable cost. Here, the one concept is affordable cost. That means, if you see the cost of delivery of these services, even today, a payment or a receipt at BC level, as per the cost estimate, it works about 70 rupees per transaction. That means, even if a person withdraws some 5,000 or 10,000 at a BC level, it costs to bank about 70 rupees per transactions. Unless these costs are reduced, even the BC model, what we are calling that business correspondent model or bank mitra model, it is not going to sustain for a long time. This was that I have already explained. How this revolution has taken place over a period of time, we moved from conventional banking to innovative banking, financial inclusion to financial security, Jan Dhan to Jan Suraksha. These are the evolution in the financial inclusion. These are some of the initiatives taken by all the banks, not only Canara Bank. That is, a large number of no-frill accounts were opened, SHGs were formed, then financial literacy centers are opened in all the district level. Now we are moving towards the block level or taluka level. Then KYC, as Pandaji put it, even the KYC, just if they need not remember, they bring any other document for opening an account. If they remember Aadhaar number, that is sufficient. Even they need not produce the photos also. Even with Aadhaar number, we can open the accounts. And BC and business correspondent and business model we have appointed. Then financial inclusion fund was created. GCC, KCC were given, the general credit card and Kisan credit card. These are the initiatives taken by all the banks. So this is about BC. Then during the first phase of financial inclusion also, the focus was on villages having more than 2,000 population in the first phase of financial inclusion. There large number of ultra small branches were opened by all the banks. Then kiosk stores were opened. Then mobile banking were encouraged during the first phase. Then coming to this Pradhan Mantri Jan Dhan Yojana, as I mentioned earlier, it took a different shape. Here, apart from opening of accounts, different services, financial services were given to the last milestone people. And here the concept was not on villages. Under PMJDY, as you know, the focus was on households. 1,000 to 1,500 households are called a sub-service area. And each sub-service area is appointed with a business correspondent or a bank branch. So the focus was on households, not on that is not on villages. And 6 pillars under Pradhan Mantri, the PMJD, Pradhan Mantri Jan Dhan Yojana. Out of these six pillars, we have already, in the first phase, it's already over. We have opened about 15.5 crore accounts. And all these accounts, nearly 12 crore of accounts were already issued with RuPay cards. And as Pandeji put it, in the country, the Aadhaar penetration is so deep nowadays. Nearly 70% of the population, that is out of 120 crore population, 85 crore population is already covered with Aadhaar. Once this, now even the PMJDY has taken a back seat, now we are moving towards JAM, that is JAM, JAM. That is Jan Dhan, J stands for Jan Dhan, A stands for Aadhaar, and the third one M for mobile penetration. As you know, mobile penetration out of the population of 120 crores, as per the latest estimate, nearly 90 crore subscribers are there, mobile subscribers. You see the potential. Even those who are not having bank account, they are having mobile connection. So unless these Jan Dhan, mobile and this Aadhaar, if all the three are integrated, then really this financial inclusion becomes a reality. These are what IT can do. As you are already aware, it brings about cost effectiveness, then it increases the productivity, then it enables the implementation of, introduction of new products that suits the people at large, then it reduces management risk, then improves eKYC and also identification. These are some of the advantages in the IT enablement. Then these are some of the initiatives taken by all the banks. That is, we opened ATMs, then biometric ATMs, then eKYC, then AEPS, Aadhaar-enabled payment system. Earlier, whenever that government subsidy used to send to, distributed to the beneficiary, there was inordinate delay and, as you put it, nearly 30%, 20% of the pilferages were there. Now, by linking this Aadhaar to their bank accounts, straight away this the direct benefit transfer, let it be by way of subsidy or any other scholarship, entire amount will be routed through these accounts. On an average, government is spending about 2,30,000 crores by way of food, fertilizer and other subsidies on an average. If entire this amount is routed through these accounts opened under PMJDY or otherwise, certainly there will be no pilferages and entire the amount will reach the last milestone. Then other setting, that is direct benefit transfer, Then Rupee cards are also populated. Now that mobile have taken such a shape, in future, if you visualize the future banking, it is mostly on mobiles. So a small mobile, that USSD platform has also, that is unstructured supplementary service data has come. By giving a missed call to *99#, you can know the balance in your account, you can transfer the amount, and also the mobile banking is also taking a new shape. If all these are put into place, certainly the concept of financial inclusion can be achieved without any fail. You see how this chart shows how these alternative channels means that is ATM or mobile banking or internet banking, over a period of time how they are becoming popular. You see a bank as all banking industry as a whole, nearly among public sector banks, nearly 45 to 48% of the transactions are pushed to these alternative channels. In private sector banks, the figure is fantastic, almost 80%. A day may come in future where nobody will come to the bank branches. New generation, they are all techno-savvy and do their entire banking needs through their mobiles or computers. Those days are not so far. The challenges, some of these challenges are, as Chief Secretary of Punjab, he put it, connectivity is a major issue in the implementation of this financial inclusion. Especially in the state like Chhattisgarh, northeastern states, where even today the villages, they are lacking this connectivity. Unless these connectivity issues are sorted out, it is very difficult. So we talk more of technology or so many initiatives. Everything is based on connectivity. Unless this basic issue is resolved, this banking, especially that cost saving or the extending this facilities to last milestone person, it becomes very difficult. Another is technology. Each banking is having its own technology. Each bank is having its own software. Unless these software of different banks are synchronized and a common platform is formed, then it's very difficult. The third one is the cost. As I put it, as per the estimate, even today, the cost per transaction through BC in rural area, it is very expensive, about 70 rupees as per the estimator. And through ATM, it is about 17 rupees. In the branch, it is about 30 rupees. Unless these costs are reduced, financial inclusion will not become a reality. So these are some of the suggestions. Friends, as I mentioned, financial inclusion, it cannot be achieved overnight unless mobiles, Aadhaar and also the banking, if all these are synchronized, then only the concept of financial inclusion can be